Hey everyone, welcome back to our second day. Thank you guys so much for putting in the questions, and hopefully we answered a lot of yours. We're going to keep going on that trend. We're going to keep answering a lot of information.
They're good questions.
Yeah, I know. And today, one of the most popular conversations with mortgages, interest rates. What's going to happen? And
Holy smokes.
yeah, wait, they're going to rise from 0%?
0%, yeah.
Just kidding. Yeah, they might as well be though right now, So yeah, but let's talk about the economy and what's going to actually be happening, and so everyone knows kind of okay, what can you expect with interest rates throughout this year, and just so you know for your home buying process.
Well, this is where I nerd out. I love talking about the market. I start every single day of my work day diving into what's the bond market doing, what's the stock market doing, studying my economic reports so that when we get, a live contract and somebody's in contract on a house, what do we recommend our clients to do that day? Do they lock or do they float?
This is why Heather is awesome.
And so I'm really well versed on this and I'm pretty in tune to it. And the thing is it just depends what article you read, right? So that's why I read a variety of them. There are some of them are conflicting, but this is one area where they don't so much conflict.
Yes, exactly. I know. I think we know. I think you know what's going to be happening. So
yes.
I think we know.
So interest rates are going to start to go up. And we've already seen this happen in December. And there's three main factors of why interest rates are going to change. So it's not what the feds are doing. It's how the investors react to the feds' decisions.
Yep.
Right? Mm-hmm. And so the main threats are economic volatility is the biggest one, I would say.
Yeah.
The second biggest one is inflation. And the feds have just announced that this isn't transitory inflation. It's not just because our economy was pumped full of a bunch of stimulus with COVID. This inflation is here and it's real, right? And then the Fed tapering program. So I don't know if you know, but the feds are our biggest mortgage-backed securities and U.S. Treasuries bond buyers in our market. And when they buy a bunch of bonds, it creates a bigger demand for them. And they're going to start to taper their purchases back. And if individual investors can't make up the difference from what the Fed is buying, that's going to push interest rates up.
Yep.
And they're already starting to talk about tapering. So there's nowhere but up.
Yeah, this is
with
true.
Rates, right?
Yeah.
So, but here is something you got to think about, and why I would say if somebody is on the fence of buying, this should be one of the biggest motivating factors, whether you're building credit or whether you're saving for a bigger down payment. The cost of waiting needs to be factored in.
Yes, hands down. Of
right?
Course. Yep.
Today, rates are 0.375%, so that's 0.3% higher than they were 1 year ago yesterday. And 1% higher in rates means that you can afford about 10% less home. And so that means if you were shopping for a $400,000 home, well, now you're only looking in like the $360 price range.
Yes, exactly. This is like one of the biggest things I wish people just understood. Like, lay out the numbers right here, and interest rates are basically what enable you to afford a house right now.
Right.
Yeah.
So the cost of waiting for that bigger down payment and the cost of waiting to get your credit score, 20 to 40 points higher, it very well might cost you more. And so I would say, don't wait. Get started today. Yep,
hands down on that. Yeah, it's just unbelievable. Some people think that, if I just wait a little bit, it's not going to make a huge difference. But I've had so many clients, actually, this has happened. So they've had to even just with COVID, let's say like your income, it wasn't as high. So then you've got a lower income level. Maybe some people are self-employed.
Yep.
And then just even waiting a little bit. Let's say you're going to get your first mortgage investment, or you want to do, an upgrade. This is going to be the difference of being able to afford it or not. And so even though it seems so minuscule, it is a huge deal.
Yep.
And so having low interest rates and running the numbers, getting a mortgage lender and having them just explain everything to you right now, and just lay out what you can afford. And if you wait, hypothetically, what's going to happen. And if you want to get something that you really, house that you love right now, is definitely a good time to kind of start that search.
Especially before prices start to go up even more, like what we talked about yesterday.
Yeah. Yep.
Rates up, prices up means you afford less house.
Yep.
So buy now.
Yeah, exactly. There you go. Well, if you have any questions, remember, just shoot us some, and then hopefully we're giving you guys some information that's really helpful, and we'll do